So our moderator enjoyed the lunch, and I'm not sure where she's gone. So strap up, because this could be cruel. Guys, very welcome. I have no preparation for this panel done, so let's see where we go. I think what we could do is quickly speak about risk, return, and rewards. From each of you, what you see crypto and where it's going. And then we go from there, and then maybe we can also see what we can do with the audience. I'm sure there's lots of questions as well. So, start with you, Wiza. Crypto, risk and reward. In the last couple of weeks, we've seen both. Tell us.
Yeah, I think the word crypto encompasses a very large spectrum of components in the industry. There are technical components that are quite compelling, but don't get discussed in the mainstream media because that stuff is not as cute as all the money-making stuff. From a financial markets perspective, I think right now, obviously, the primary driver of a lot of the demand and a lot of the activities, speculative investments, which I don't think is the best that the industry has to offer, but it's certainly the easiest for people to access. And for those who are able to manage that type of risk and to ride the market cycles, I think some of the returns can be quite lucrative. But for most people, I think for most retail investors, I strongly wouldn't recommend getting into it, especially with money that you can't afford to lose. What I think will be useful to have will be, applications and systems that allow people to get into crypto safely from an investment perspective. I think that's going to look like almost like robo-advisors today for other types of traditional investment products. And that could be something that I think has got mass appeal. On the rewards side, I think we're a few years away from really seeing some very interesting implementations of exchanges, not just for crypto assets, but also for tokenized versions of traditional assets such as stocks. The vast majority of Africans living in Africa are locked out effectively from being able to participate in the global economy in this way. And blockchain solutions are really the only avenue through which they can be able to transact. There's also a massive cross-border component. Chainalysis stats from last year indicated that over $100 billion was transacted across African addresses last year. $100 billion is not money that you can just pick up on the road. And those are just the known transaction values. The actual value would likely be orders of magnitude higher, but we don't know because there's no real true transparency or visibility into these addresses. So I think there's a lot that's happening and quite a lot to be unpacked as the conversation proceeds.
Open it up to the rest of the panel.
So for crypto is still at a very, very early stage, and we need to do a lot more of education for people to ensure that they're not just getting into crypto because they think there's a lot of reward, or a lot of people see it as a Ponzi scheme. So that's why it's important to push out products, push out features that help people, the layman, get into crypto in just as easy as 5 clicks. So look at products like savings products, which you can do with your stable coins. And if you have a bit more appetite, use traditional crypto like BTC. With stable coins, you are sort of protected from the craziness of the market, and your returns are a bit guaranteed. But if you're getting into crypto because you think you can get 10x next week, you most likely get your hands burnt. And that's what we constantly, at Busha, that's what we constantly educate our customers on, because you see people coming saying, how can I turn my 1,000 naira to 100,000 naira next week? And we say it doesn't work that way. You need to go through the process. You need to think smartly about what you're doing. And most importantly, you need to put in money that you can afford to lose, not because you're going to lose it, but because if the market goes against you, if you get in at a high price and it goes below that, you you are protected. You don't panic and sell and make an eventual loss. In terms of DeFi, it's an interesting space, and
for DeFi, can you give people, and for people who don't understand DeFi, a short explanation of DeFi?
So DeFi is decentralized finance, and it's finance that's not controlled by one particular person, like by one regulatory body. For example, with traditional fiat, that's controlled by central bank of any country. But decentralized finance is controlled by lines of code, if I may put it that way. And the biggest risk with this is that there's nobody to hold accountable if something goes bad. Like, your money could just go into the thin air. We had a bad experience in DeFi a couple of weeks ago where Wormhole was hacked, and one of our major investors had to come in and step in and sort of help them out of that bad space. So that's one of the risks associated with DeFi. But then again, if you're on the right side of the market, when the market is in a bull run, everyone is excited, everyone is making money. So if you're on the right side of the market while doing things in DeFi, then you definitely will have a good time, and you think crypto is all about being green, but you should always be prepared for the rainy day.
All right, guys. Thank you. So for me, I feel like the idea of crypto has been a little bit washed down to investments and trading. But I feel like there's so much verticals to it. There is DAOs, there's decentralized governance, there are NFTs, there are earn to play, play to earn. I feel like we need to be more deliberate about what we say about crypto, because crypto is not just about money making. We have seen government structures, that can't be implemented in real life, implemented on the blockchain, where there's free and fair elections, there's voting, there's a community that is striving to build out a product without a centralized entity holding the voting rights, or where the whole community is being incentivized to carry out an action. And with NFTs that are coming up now, we have seen a new way of certification where it's globally verifiable, and this has changed the space dramatically, because now people can create content in any part of the world and sell it to any part of the world without actual physical travel. This was previously unimagined, and crypto is so much more than buy now, sell later. There's so much value that is coming on the space now. There's the metaverse. Even though I wouldn't say I'm an expert in any of this, but I feel like you need to be careful about what you are actually looking into. There's so much dynamics to it. There's so much verticals to it. So don't just be focused on the buy now and make so much money later. There's so much you can do. There's so much infrastructure being built now. It's so crazy that lands in the metaverse are more expensive than lands in my town now. So things are really changing, and the world is moving to a new place, and we should be more aware of that rather than buying Bitcoin now and selling it at 60,000. Yeah.
Apollo.
Great, thanks. To take Munachi's perspective, I see crypto as a bet that the current system of value identification, accumulating resources to create that value, which you normally use money for, transmission of that value, and then distribution of the rewards of that value creation process could be made a bit more efficient with cryptocurrency and the blockchain technology that it depends on. And that brings into mind crowdfunding scenarios, brings into mind prosumer movement, empowering consumers to come together and decide, look, I don't have the right type of product. Say, for instance, let's say I needed something very geeky. I need a touch interface for my MacBook, right? and Apple is not going to do that soon, right? But we could come together, all these MacBook users, and decide, look, I want to do computer-aided design on my MacBook, and I want a touch interface with pen support. Could we build an add-on on top of this? And we could easily build a DAO, a little organization, a collaboration, put in resources, and make this a reality. So cryptocurrency and blockchain sort of decentralize this whole process of value creation and empower the holder or the consumer in ways that the most centralized or current financial system doesn't do. Right? So that is my big picture view of all this.
Great. So, I mean, obviously, in terms of risk, you put your money into an exchange, you put your money into a bank, typically you're guaranteed your money in the bank. We've seen regulators across the continent, sorry, I have to call out Binance here, you know, stopping people putting money into exchanges in certain instances. Luno have got regulated in other markets. How important is the regulation? And I mean, what are you guys doing in terms of working with regulators to try and reduce that risk for people, so when they do put money into different cryptos, or I know you can't guarantee returns in DeFi, but how important is that regulation? And what, you know, as was mentioned on the other stage earlier, you know, from a fintech, he said it's time the fintechs regulated the regulators. Is crypto going to regulate the regulator or inform the regulator? Like we're in Kenya, which is very not anyone in the room from the CBN? Not very favourable towards crypto. Nigeria, as we know, has not been very forward thinking. So how do you educate the regulators, and how far is that piece away, do you think? So then the risk is less for the average guy who wants to put his money in.
Right. Thanks. So there's different perspectives even within the community. There's a perspective that crypto does not need regulation, and there is a portion of crypto that will exist outside regulation, and I think it is growing because once you cannot control the software and the smart contracts and their creation, and founders can choose to remain anonymous, then it could remain out there in the wild. Then on the other hand, regulation helps bring trust, because consumer protection is a big deal. And once consumers know there is a final authority they can appeal to if they've been scammed either by a rogue exchange or you know, by some weakness that should be controlled, it could help bring that peace of mind that helps create this mass market opportunity. So the hope is that we will get there. I think we're getting there, a matter of when and not if.
Do Luno speak to the regulator?
Yes. So going there, I've had lots of interactions with the regulator in Kenya and in Uganda. Part of the big pushback I have gotten is, so what is this crypto thing? What is the value add? Is it just another gambling thing for which you can apply for a regular betting, licensing, control board, you know, authorization? Why didn't you show us the value added, right? It's a bit of an unfair question, because there's many people bet on quails, people bet on very many things in the market that don't fall under this level of censorship. However, it is also a challenge to the crypto community. Why don't you bring on the strong use cases that impact the masses, that improve quality of life? Then it'll be harder to censor those.
Anyone
So
else?
it is a challenge to the community.
Anyone else want to jump in on?
Yeah. For me, I feel like we are not really sure what the regulators want to start with. Like, if it's anti-money laundering, it's only an idiot that will launder money through crypto right now. Like, it's so difficult. You can't spend the money. It's almost unspendable. Anywhere you send it, any exchange, it gets flagged almost immediately, because everyone is integrated with Chainalysis and Elliptic and everyone. So if the purpose of, for the government, if it's to control, money control, then that is not really a problem with crypto because it's very transparent. If it's the purpose of taxation, and obviously crypto companies are willing to come to the table and play ball. So the question is, what do regulators really want? And I feel like that has been the question that we have always asked. You know, we have had numerous reach outs to governments. I'm like, okay, what is the issue here? Why are we not regulated? And at the end of the day, they're not really ready to play ball yet. So I feel like until they are ready, because they have to do things at their own time, they probably have bigger issues to deal with. So we are ready for them. And I feel like the crypto community already creates a lot of value. I don't know what you mean by that, or in the space, especially in Nigeria, where I see, you know, the unemployment was like 50%, and that's why crypto is such a big deal where we are, because everyone is looking for a new way, a new opportunity. I keep saying this, that there's all other industries in the world are already saturated. Real estate, the value has already been created for a while now, but crypto is the new upcoming thing, and it's the one that we young people can really participate in and have a say in how this ecosystem plays out. So I feel like there's so much value creation now. There's play to earn, there's NFTs. I have friends that are doing things online now. Like, I'm surprised that, wow, she's telling me, where can I upload my NFTs? I do this, I do that. And I'm like, okay, there's so much resources out there. So the value creation to community is exponential. It's just for the government to be willing to want to regulate. Most of them are not willing to. Look at what's happening in Russia or Ukraine. Yeah, the government is willing to play ball now. Until they are willing to, there will not really be any regulation on the side. So that's my own opinion.
All right. Before we go on, we have a microphone in the middle of the room there. So I'd like to try and take as many questions as we can as well. So if you've got a question, walk up to that mic and we will get you on whenever you want to ask a question. Binance.
Busha.
Well, sorry,
Busha.
you're Busha. Binance.
Busha, yeah. So for me, I think the biggest issue with regulators is the fact that they're not willing to learn. For example, from what Apollo said, they're wondering, what is this crypto thing? And the only way you can learn about an industry that you have no expertise in is to engage with those that participate or those that are active or active stakeholders in these industries. So for us to have proper regulation in crypto, the regulators, the governments of mostly African countries, which are generally hostile towards crypto, they need to call us to the table. They need to bring us to the table. Let them speak to us. Let's help them develop a framework. Like Munachi mentioned, is it AML that is your worry? Is it money laundering that is your worry? Is it cybercrime that is your worry? If these are the issues you have with crypto, there are systems in place. A lot of exchanges are already self-regulated, doing KYC, bank standard KYC, proof of address, everything is being done to ensure that any day that the regulator comes knocking, we can let them know that, oh, this is what we've been doing even before you asked us to do it. So we're open and we're operating with clean hands, and all you need to do is speak to us. Let's educate you on this new technology that's taking the whole world by surprise and is the future. And let's all work together and make sure that the crypto space is a clean place and the government is also happy. The government can earn taxes from it. Government can even learn more. Was it last week or 2 weeks ago that we heard about those involved in the Bitfinex hack from 2016? The Bitcoin that was stolen then is worth billions of dollars now, but the perpetrators or whoever laundered the funds for the perpetrators, they were just arrested a few weeks ago, and this was done with the help of the blockchain. If you process a transaction on the blockchain today, you can't go back tomorrow and say you're going to modify that. That's something that blockchain solves. Everything is transparent for the whole world to see. The assets on a particular address is transparent for the whole world to see. So blockchain brings transparency. You can't hide. You can't be a cyber criminal and be free on the blockchain. Everyone is going to see it. It's going to eventually come to light. So we're happy to work with regulators if they are ready to come to the table, invite us to the table. Let's all work together and make the world a better place.
Moyo, you know what's funny though? When law enforcement want us. They know where to find us, but regulators never find us.
That's true. That's very, very true. When law enforcement and taxman, FIRS,
they know where we are.
they know where we are. They have our address. They have our phone numbers.
They even have our wallet addresses. It's so bad. There was time something happened in the US, and we got a mail from EFCC like, this wallet belongs to Yellow Card. I'm like, how do you know this wallet belongs to Yellow Card?
Yeah.
So they already knew, they know, but they don't want to regulate. So as I said, it's just, they're not ready to play ball.
It's probably an ego thing as well. Like, who are these
Young boys.
young people in the crypto space? But at the end of the day, everyone just needs to work together for the greater good of the. We're creating jobs at the end of the day. We're not bad actors. So if they hurt the businesses, they're eventually hurting the economy by extension.
But, I mean, their argument would be that money is leaking out of the economy, that, you know, you're getting dollars or moving money out of the economy. Have any of you come together and tried to speak to the regulator as an association, and what's the response been?
No response.
No response.
Well,
that has happened many times. You know?
Well,
like
Let Wiza go.
I think it's dangerous and misleading to assume that the regulators are not aware or do not understand the premise of the technology. If you speak to many individuals who actually work at financial regulators across the continent, a lot of them are like, you know, actual active crypto users who are holding tokens perhaps in a personal capacity, but, you know, not in any official capacity at all. I think it's important to understand what the regulation is optimizing for. And in many African countries, a lot of the resistance to the adoption of crypto assets comes from a capital control perspective. And, you know, in a dollarized world where Africans wanting to do global business are dependent on US dollars to facilitate that, there's a strong rational basis for wanting to protect the value that is sitting in a country and preventing the leaks that Andrew has described. That's on one hand. On the other hand, I do believe that adoption of crypto assets introduces a potential alternative to the US dollar. And, you know, if I look at peer-to-peer trade volume in Nigeria specifically, for business users, people are buying, you know, Bitcoin and other assets and stable coins because they can get access to dollars. Yeah. And, you know, for the first time ever in the history of the world, we now have this monetary instrument that we can rely on to facilitate international trade that's not the US dollar, right? So I think there's like a very delicate dance to be played there, because on one hand, you know, you did need like capital protections today, but if we can work together through licensed intermediaries, such as banks, to actually present a case to the regulator for common sense framework, I think that's something that can really come to light. If you look at South Africa's example, South Africa has an intergovernmental fintech working group, which is a public-private sector consortium of various actors who have come into the space to propose some regulation around crypto assets. And, you know, within the South African economy today, there's a framework for you to operate an exchange legally, and it's great business. You know, Luno's headquarters is there, and I recently saw that Luno got a very nice building in Cape Town, right in between Standard Bank and Absa, which are two of the 5 largest banks in South Africa.
How much was that building?
I have
Apollo?
no idea.
Apollo will tell us.
Top secret.
How much a Bitcoin?
I'm sure. I mean, I think those are clear examples. In other parts of the world, you do see crypto asset providers growing alongside the traditional finance players, and I think this is going to be the gateway to engage. Now, Andrew had asked a question about whether or not, you know, there have been joint efforts from any association. I can say that, you know, I know Kenya has a blockchain association, Uganda, Rwanda, several countries in East Africa have these associations that are proactively engaging, trying to find ways through which we can develop regulatory frameworks together. But the process is not easy, nor is it fast. So I think a lot of the fruits of people's labor is going to be seen in subsequent years. What I think would be extremely critical would be giving the regulators the technical tools to be able to monitor on-chain activity. Because in the absence of those tools, there's not even a conversation to be had around regulatory frameworks. We need to move from a position of the industry being risky by default to having some sort of tools and mitigations. And then it becomes a lot easier to go to the regulator when you're proposing solutions to some of their problems as well, as opposed to saying, why aren't you guys giving us leeway to be able to do this? And I think that's a much bigger conversation to be had.
I'm happy to open it up to the floor if there's any questions. Does anybody got any questions? Yeah, if you go to the mic, there's a guy with a mic. If someone can come to him, or there's a mic in the middle of the floor there, whichever one works. Try and make this as interactive as we can.
Okay, so my name is Saruni, and I do have a question that is, or rather, yeah, let me say it's a question. Based on the part of regulation, right? Not talking about the regulators, but just regulation in general. The whole idea of cryptocurrency is to avoid regulation, right? So, as it is right now, don't you think that crypto in general is just like a money-making scheme right now? Because even like, I think one of you said earlier on that those who are jumping into it are only doing it because they think, hey, tomorrow I could make a lot of money. And if regulators are not willing to regulate it because it's getting money out of the economy instead of bringing it in, is there really a future for crypto in terms of actually growing economies?
Okay. All right, great.
Do you want to go?
Allow me to take this one. So the objective of cryptocurrency is not to avoid regulation, but to enable more people to do more with the value that they have, right? And that could involve disintermediating older, slower, less efficient players, right? And also rules and regulations, right? So one conversation that is pending to be had in that space is, imagine if we had this big global Twitter space, and the question was posed, can you imagine what the world would be like if cryptocurrency was prevalent and it was common for people to create, exchange, and store value using cryptocurrency, right? And then from there, then you'd ask, so what regulations would enable this, right? So the objective of this decentralization is to enable people do more, be more with their value. At the current stage, the biggest use case for crypto is investment and speculation, but it is also serving a really critical need because we need liquidity, for instance, so that if I'm receiving remittances from the US in Kenya, I need to know that I can very easily change my Bitcoin into Kenya shillings, right? It's also enabling exploration of the space. Yes, money is a big attractor. You're getting all these developers, all these enterprises jumping into that space. So this speculation, investment, money grab space is just assisting with marketing and discovery of the potential of this technology. And I believe as we go down the road, things will begin to even out a little bit, and then we begin to settle on hard use cases of crypto. So this is just a stage, in my view.
All right, so just to add to what he said, I feel like there are many aspects of crypto that are not under so much more regulatory purview. For instance, DeFi. The idea of DeFi means it's almost impossible to regulate it in the sense that there is the full infrastructure happens on the blockchain. There's no external endpoints except maybe oracles, but the reason why regulation is so prevalent now is because people are not actually terminating end payments in crypto. For instance, I can't pay my vendors in Bitcoin, and that is why it's so prevalent. Like, if the world ever gets to that level where the full infrastructure, and that is why DeFi is almost unregulatable, because in that space, the whole value chain of the transaction happens within the blockchain. It doesn't seep out. You understand? Regulation starts to happen when you're interacting with the traditional systems, and that is where the regulators are playing the part. You know, so for us, really, like I said, crypto trading is not the end of what crypto is. It's just the beginning. You know, there's so much value, there's so much upside. You know, there's so much things you can do with Bitcoin aside from buying, selling, and trading into local fiat, even though that's the most.
We've got another question, so I'm going to go straight to the next question and give it to the next two panelists. If you want to introduce yourself and ask your question.
Yes, I would like to. Good afternoon, everybody. My name is Christian Warte. I'm a crypto investor, serial entrepreneur, and a huge fan. And first of all, congratulations, Andrew, for putting this all on. It's amazing, and I think having all these industry players here is fantastic, not only for Kenya, but for the whole region. So thank you for that.
It'd be better if we had moderators who were supposed to be here.
Always areas to improve. Now, gentlemen, thank you so much for sharing your knowledge. I have a question, and I think it's the elephant in the room. First of all, how big do you think is the crypto market in Kenya and in Africa? Because we are all talking about growth rates, which are incredible, but no one really knows how big is the market. Now, you have launched businesses, and you must have launched these businesses with revenue expectations, profitability expectations, KPIs. How big is the Kenyan market? How big is the African market in crypto?
Was it?
Yeah, sure. I think that's a great question, and it gives me some interesting things to think about in terms of how do you actually size a crypto market. If you're running, a business like an exchange, then primarily your revenue will be coming from the volume that you process. And in the absence of a clear regulatory framework in Kenya, there are not very many centralized exchanges that are operating. What you can look at as a reliable proxy is the data on usefultulips.org. They track the volume of peer-to-peer trades across a wide variety of geographies, including the ones in Africa and Kenya specifically. So they have aggregate data from exchanges like Paxful and Local Bitcoins, and I think that's like a very accurate guide in terms of the trends that you are seeing. I think it's very, very difficult to quantify the actual trading volume because a lot of the larger exchanges, including Binance, which has very high liquidity in Kenya on peer-to-peer, they don't report their data to Useful Tulips, and they have no incentive to as a private company. But I think that the really key stats to pay attention to is the data from the Chainalysis State of the Industry report from last year, which indicates that $100 billion of P2P value was transacted in Africa alone. If you can extrapolate from that, those data points, I think you should be able to significantly see a sizable opportunity that's certainly worth addressing. And I guess part of being this early in the space, as most of the exchanges that are operating here today are, is taking a degree of upfront risk around the uncertainty of the market size. So I know I've said a lot of words, I've thrown a lot of numbers. No one really knows how big the market is, but it's certainly going to be big enough for all of us, in my view.
Thank you. Any other views on that?
Yeah, to buttress on what Wiza said, the easiest way to have an idea of the volumes is to look at the peer-to-peer exchanges. Then there's also the informal exchanges. Since regulatory environment is hostile, a lot of trades, a lot of transactions go out of the purview of the public. So a lot of transactions are going on WhatsApp, Signal, WeChat, Telegram, like billions of dollars in transactions being processed across these channels. And the easiest way to look at that volume is to look at the Chainalysis report that was done, because this shows the transactions that went through Busha, that went through Yellow Card, Binance. Even if these exchanges don't report their numbers publicly for security and different reasons peculiar to each organization, you can still use that to have an idea of what people are doing in this space and know that the space is big enough. We're all competing, but at the end of the day, we all work together for the greater good of the industry, and we're just getting started. There's still a lot of room for growth.
Well, just to chime into what all of them they said, and one thing you need to bear in mind is nobody can give you that number you're looking for, you know. But what we can tell you though is what is the value that can be created in Africa. First of all, we need to understand why Africa, right? Africa is the place where we have the highest level of unbanked people. You know, it's the region where there's no credit facility. It's the region where moving money between borders is almost impossible. You know, and there's the region where payments are very poor. So when you think about all that, you understand that in as much as you don't know the number now, the market is large because crypto solves so many of these problems, you know, with different types of integration. So you would know that definitely if I just face payments, I'm going to have a big market because the market is almost underserved. If I'm going to face credit, if I'm going to face remittances, the problem is so large because the market is totally underserved. You know, so for you, there's nobody here that can tell you that number. I can't tell you that number. Even Chainalysis can't give you that number because if you ask, there are people that are doing DeFi, there are people that are doing end-to-play, there are people that are doing NFTs. Nobody knows that number, you know, because first of all, crypto is pseudonymous. Nobody comes online and signs a registry, you know. But one thing you should bear in mind is how big is the market. With the size of the market, you can be able to justify how big a market share you can choose to take.
Thank you.
Yeah.
Great, thanks for that. Anyone else got a question?
Yeah, I do. My name is Leon from Chipakash. For the avoidance of doubt, Chipakash does not allow crypto trading in Kenya. But I want to speak into something that Wiza, my colleague, mentioned, and I'd like the input of the panel on this. So I sat in through a panel in Cape Town one time, I think 2018 or 2019, where the panelists were mostly representatives of the different central banks. There was Namibia, there was Kenya, I think there was SA and a couple of others. And I think one of the panelists said that if you took, forgive my French, BS on one hand, and if you took crypto on one hand, they consider that to be similar. So in Kenya specifically, there's a directive that was given in 2015 to all the banks that if you are banking or if you are doing business with anyone that is associated with crypto, then you risk losing your license. So obviously, no bank can touch any company that is officially trading crypto in their platform. So my question to the panel, and of course, just to give a little background is, for example, in Kenya, there is the blockchain task force that's led by the former Minister Minister of Information Bitangendemo, and they came up with certain proposals of how the Central Bank of Kenya can engage with companies to trade crypto, come up with some regulation of some sort. So my big question is, and also what Wiza said, that we assume that the people in our central banks do not know, but they actually know, they actually trade, etc. But the vibe, the communication that we get is we don't recognize this thing at all. So my question is, what is the best engagement strategy with the different central banks across our continent for us to actually begin to get this out of what you'd call below the ground type of trading into something that is actually not being hidden any longer? So how do we engage these different regulators, especially the ones who have come out explicitly and said, we don't recognize and we will blacklist, or we will not allow you to even be banked in our respective markets?
Anybody? Yeah. I'm not going to answer it.
Yeah, I have a couple of initial thoughts, and thank you, Leon. I think a key thing is to understand the incentive structures that exist for central bank regulators on the continent today. And there is quite a lot of structures that have been put in place around safeguarding the US dollars that are coming into a country and monitoring very carefully the US dollars that are flowing out. If we now present to these regulators to say, hey, by adopting this system, you can actually start to reduce dollar demand in your country, I think that presents a very compelling incentive for them to start to consider. Obviously, there are so many different factors that affect what should be a otherwise clear path to like monetary policy. But one thing that's very pressing is that dollars are in high demand everywhere on the continent, and it's extremely hard to get them out. We are entering an increasingly globalized world where value has to be exchanged quickly between users. And there are a lot of gaps that exist even within Africa's banking structures today. If we can demonstrate, and I do think the key word here is demonstrate, in very clear terms, how blockchain solutions start to alleviate some of these problems, then I think there's a really great starting point to engage further.
Let me ask you a question, Wiza. Do you think crypto doesn't reduce the pressure on foreign reserves? For instance, in Nigeria, the foreign reserves have been dropping for a while. Whereas every dollar transaction needs to go through the foreign reserve to actually get terminated elsewhere. But crypto provides that end-to-end value creation. So don't you think the central bank knows that with crypto, we can reduce the pressure on the drying out of our foreign reserves? Do you think there's enough incentive for them?
I think it's a powerful one, but then the real question is like how? And how do you do that out at scale? How do you enable I can't speak to Nigeria, but in Malawi, some of the biggest drivers for dollar demand are like importers for fast-moving consumer goods. How do you enable somebody like a Unilever to be able to, through their bank or through their other financial services intermediary, purchase crypto assets instead of dollars, because you need the dollars for some other things? I think that the big question is how. I'm sure they're aware, I'm sure we are aware, but the big question is how. All
right, I'm just going to stop. We're going to have one really quick last question, and then we're going to have to wrap it up.
Okay, good evening, everyone. I am Adekunle Daniel, a blockchain developer. I built Nigeria Bitcoin ATM machines. So I have a question, right? Like we talked about regulation. Do you think that the central banks don't know exactly what crypto solves, right? Are we coming to wait for them to actually come, or we are going to create some kind of stakeholders, there's some kind of association where we tell them, how this disruptive technology, revolutionizes finance? Like last year, we were in a conference in Nigeria by TechNext. And then one of the ministers, like the pastor.
Is there a question here? Because we haven't got much time.
I want to ask the question, yeah. So now the question is, do you think that it's kind of ideal for us to like wait for the regulators to come, or we, create some kind of association, like a stakeholder association, whereby we tell these people how this technology works?
Okay, let me take this one. So first of all, I have absolutely no doubt that central bankers are completely conversant with cryptocurrency and blockchain. They actually have workshops and education briefings on this, right? The problem is probably how to ensure what they manage. They're still going to be able to manage safely with crypto present. About regulation, I don't think it is a sprint. It's going to be a marathon. I believe all exchanges here and many others are constantly hammering away at regulators' doors, trying to have conversations. So those just need to continue, right? At the same time, there needs to be a continuance of mass education so that you have a lot more of the world population looking at opportunities to benefit from and to create value from crypto. And in parallel, the third leg would be for us running crypto platforms, especially exchanges and wallets, to sort of like self-regulate. We set a minimum standard of the quality that we are going to deliver to customer protections, really good security, KYC, AML where it needs to be, and to talk and to talk amongst ourselves as well. If we need to provide insurance at some point, we probably could come together and develop some sort of package. So you need a three-pronged strategy, right? Continuously hammering away at regulators' doors, deep mass education, both for users and potential developers and entrepreneurs. And thirdly, ensure we are giving customers quality. We're making sure customers are experiencing, fewer scams, fewer hacks, good user experiences, and just bide our time.
Unfortunately, we're going to have to wrap it up. But just to say, to continue the conversation, actually, someone mentioned a Kenyan task force. So Michael from the Kenyan blockchain task force is actually speaking on a later panel today, which is around CBDCs. So the central banks are looking at CBDCs. So there's a session on that. And also tomorrow morning, there's a coffee and crypto meetup in the expo hall. For those of you who aren't going to go out and get drunk tonight, and come in early and can catch up around a coffee and some croissants and have a chat. And finally, I'd like to say, can you give our panel a warm hand for a good session? And sorry, while I'm up here, one last bit of housekeeping I can share. Anybody who is traveling internationally and needs to get a PCR, we have a PCR testing site just at the exit before you leave this building, in on the right-hand side. So Zuri Health, who are a startup who pitched next door, are providing PCRs there. You got to pay for them though. But if you need to travel, you don't need to leave the building. You can get your PCR test done here today if you're traveling tomorrow or whatever. So just to say, just the last door before you leave the building, in on the right-hand side is a testing facility there. So thank you. We'll move to the next session. Thanks, guys.